Hi, I'm Eric Sattler, and this is my summary presentation of the company analysis I did on the Priceline Group. A few facts about the company. The company is based in Norwalk, Connecticut. It was founded in 1997 by a man named Jay Walker. Priceline Group is the industry leader in the travel-related reservation services business. Priceline started with the trademark Name Your Own Price bidding system, and it was successfully promoted by television actor William Shatner. There are over 15,500 employees, and it's interesting to note that 80% of those employees are outside of the United States. The company has grown through acquisition over its history. The subsidiaries, or what the company would call OTCs, or online travel companies, include Priceline.com, the flagship brand, Booking.com, which was acquired in 2005, Agoda in 2007, Rentalcars.com in 2010, Kayak in 2013, and OpenTable in 2014. OpenTable is somewhat interesting in that it is a restaurant reservation system, so it's new territory for the Priceline Group. The competitive environment for the Priceline Group is characterized as intensely competitive. Priceline Group's primary rival is Expedia, and they are also a company that is growing by acquisition, having purchased Orbitz and Travelocity, two pretty big names in the industry, back in 2015. So there is some potential competition from Amazon, Google, Apple, and Facebook. This was mentioned in the company's 10K. These companies have not gotten into the industry heavily, but they have dabbled, and obviously they have the technology base, customer base, and financial capital base. If they chose to participate in this industry, it could definitely mix things up quite a bit. So there is a real and growing threat from sites like Airbnb. Airbnb is the Uber of the travel industry, and I know from reading and research that both Priceline Group and Expedia are working quite hard to combat the competition that they're seeing from sites like Airbnb. There are many other smaller players in the marketplace, but Priceline does remain the industry leader. Some financial highlights of the company. The stock trades on the NASDAQ in the Global Select market, and it trades under the ticker symbol PCLN. The share price as of closing on October 28 was $1,474.82. It is trading near its 52-week high at this point in the year. It has a market capitalization of just under $73 billion right now. The 2015 revenue was just over $9 billion, and gross profit on that revenue was $8.5 billion, so pretty high gross margin. The net income, also pretty healthy, $2.5 billion for 2015. Interesting to note, again, the international influence here. 87% of the revenue is derived from international markets. So the company has never paid a dividend, which I found interesting. And then a couple other numbers that just jumped out at me in the statistics I saw. Revenue per employee of just under $600,000 per employee, and maybe even more importantly, the net income per employee of $164,000 is just, those are just amazing stats to me based on the businesses and industries that I have been in previously. So looking at the financial statements on the balance sheet, just to call out a few statistics, current ratio of 2.47 shows that they're well able to cover their current liabilities. The cash and cash equivalents of $1.5 billion, very healthy. They're sitting on a good amount of cash there, and current assets of $3.5 billion, also very strong. Debt to equity ratio of 0.7 shows that they are leveraging, but they're in a comfortable position there. Looking at their income statement and the historical numbers, we've seen consistent growth in this company, revenue growth over the years, very healthy margins over the years, and historical growth in earnings per share. And again, based on the analysis and what I have read, there is expectation of continued growth in earnings per share, which is a very important measure for a company. Cash flows show that net income is turning into cash, and that the company is increasing leverage, which just for me, reading between the lines, it appears to me that they may be preparing for potentially another acquisition. So definitely something to watch. So as far as analysis and recommendation, what I found through my research and analysis, it's a company with very healthy financials. They're in a good cash and debt position. They've got strong brands that are growing, and as I said, the market leader. They are a flexible and innovative company. They've done well over the 16 years they've been in business, and especially weathering a pretty deep recession that would affect the travel industry, obviously, but they survived that very well. They've got a global presence, which gives them diversification and opportunities in new markets, which is important. And overall, I just see a company with excellent potential for continued growth and success. So based on all of that, my recommendation would certainly be to buy this stock of Priceline Group. So I'd like to thank you for your attention.